Hi, it's John Kelly. In this module, we are going to discuss Section 402, Audit Considerations Relating to an Entity Using a Service Organization. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, I'm not going to spend a long time in this module because the question is, how frequent is this? And I'll give away the answer on the bottom of the slide. It's very infrequent. But in order to understand this, the first thing we need to do is understand what is a service organization, when does this section apply, how often does it affect the audit, and if it does, what do we do about it? But as I said, this is very infrequent. So the definition of a service organization. This is when an entity has outsourced some aspects of its business, and it can range from a specific task to an entire business unit or function. So what we have to think about is, does this affect the audit, our ability to obtain sufficient appropriate audit evidence, or not? So as an example, we could think about it. If a bank is processing our checks for us, we have outsourced a portion of our business to them, though if you think about it, we should be able to properly control that ourselves, and actually having the bank running sort of a parallel system for us and allowing us to reconcile what's gone through the bank to what's gone through our records actually functions as a useful control. So is the section applicable? And the answer is no, and 402.5 says no, it's not applicable as long as the transaction is authorized. Similar example, securities transactions processed at a securities broker, and again the answer is going to be no. If the transaction is authorized, it doesn't count. Processing payroll transactions, well, now there's a whole bunch of stuff that the service organization is doing for us and a whole bunch of controls that are at the service organization, but again, we should be able to very easily check that they've done what we asked them to do by comparing things and checking that it's been done properly. So again, the answer is probably not, because in each of these three cases, we probably have our own adequate system of internal control, and the auditor can look at it, and there's no need to do anything else. Now, some other examples, outsourcing the entire tax planning or compliance function, outsourcing the entire accounting function, outsourcing the controllership function. Well, then the answer is maybe, that it might be that we're now lacking some internal controls because we've outsourced them and they exist only in the service organization. So the auditor has to say, is this relevant to the audit, and have the service organization controls become part of the client system? And that is unusual and rare, so we're not going to come across that terribly often. So our choices, and the first, if it's not part of the system, we've already talked about that. What do we do? Well, we use the client's controls, and that's obvious. What happens if the service organization controls have become part of our system and we do not have controls anywhere on our system, and we are effectively using the controls at the service organization? Well, our first choice, so if it has become part of the system, what might we do? Well, we might go and visit the service organization, though that's probably going to be impractical, having hundreds and hundreds of auditors stomping through the service organization at year end. So that will probably not be practical. So the next choice is there is a Type 1 service organization report, which we might ask for if that was sufficient for the auditor's purposes, and that is a report on the design of internal controls at the service organization. And the second type of report we might get is on the design and operating effectiveness of the controls at the service organization. Now the question in all of these is availability. Is either a type 1 or type 2 report available? And as this is so rare, I'm going to wrap it up right there. And just one more observation. There is no mention in the audit report unless there are difficulties. So if you get one of these reports, or if you visit the service organization yourself and there are no difficulties, you make no mention in the report. Now, the provision of a type 1 or type 2 report is an even more complicated and even less frequent event. And there are 3 sets of standards. There's an international standards, IASE 3402, and there's actually an IASE 3402 website that I've noted there. In the United States, it's SSAE 16, and in Canada, CSAE 3416. So if you are an auditor auditing the service organization and providing either a type 1 or type 2 report, these are the sections that you would follow. But as I said, this is infrequent. So, thanks for listening.